In this video, we will teach you exactly how to trade trend lines like a pro. We will teach you what trend lines are, how to draw them correctly, and how to spot high-probability trend line setups. When used properly, trend lines are one of the most powerful tools in trading. Sadly, 99% of traders use it completely wrong. In my entire trading career, I have encountered many trend line setups and profited off them greatly. In this video, I will reveal exactly how I trade trend lines and how you can profit off it too. Without further ado, let's jump right into the video. There are 3 golden rules that apply to all trend lines. Before we reveal them, it is important to know exactly what are trend lines. Trend lines are diagonal supports or resistance that can be drawn by connecting multiple swing highs or swing lows on the chart. In a rising market, you draw the line across the lows. This forms an uptrend line, acting like a floor of support. It shows you exactly where buyers are stepping in to push prices back up. In a falling market, connect the peaks. This creates a downtrend line, acting like a ceiling of resistance where sellers are heavily keeping prices down. Now you might be wondering, do you draw the lines touching the wicks or the candle bodies? Here are our 3 simple rules to draw trend lines that actually work. Rule 1. Connect clear swing points, not random wick tips, not candles in the middle of nowhere. In an uptrend, you anchor to the higher lows. In a downtrend, lower highs. That's it. If the point doesn't stand out immediately on the chart, you shouldn't draw the line at all. Rule 2. 2 touches create the line. But here's what separates amateur traders from professionals: the third reaction. That's when the market is telling you, this level is real and you should probably start paying attention. Rule 3, and this one is brutal if you're honest with yourself. Stop forcing the line. If you've adjusted it 5, 6, 10 times just to make it fit the candles, the market is not respecting that line. You are, and the market does not care about your opinion. You've identified a valid trend line. Price is now coming back for the retest, but is this a valid reaction or just noise? You do not buy or sell the moment price touches the line. That's the mistake. You wait for confirmation. The first confirmation signal is the rejection candle. Look for a strong rejection candle at the trend line, a bullish pin bar, an engulfing candle, a hammer. The candle itself needs to show you that buyers or sellers showed up at that exact level and defended it. No rejection candle, no trade. The second confirmation signal is a clear spike in volume. If this is helping you read the markets with more clarity, hit like, share it with a trader who needs this, and subscribe for more practical trading lessons. On TradingView, you can easily toggle the volume indicator on and off. A strong volume spike at a key trendline retest adds powerful confluence as it suggests institutional interest at that price level. This gives the setup more conviction and helps us avoid trading random trendline touches with no real edge. Lastly, ensure that there is structural alignment. Check the higher time frame. Is this trendline retest happening near a key support zone, a previous high, a moving average? The more confluence you have at that touch, the stronger the trade idea becomes. But what if price breaks cleanly through the trend line? At that point, the trade idea shifts from trendline continuation to a potential reversal setup. However, a break of the trend line does not automatically confirm a trend change. Price can break structure temporarily, trap breakout traders, and then snap straight back into the original trend. That is why we need confirmation before entering. Here are a few ways to avoid getting caught in false breakouts. In the latest price action, price failed to make higher highs or lower lows, signaling fading strength in the move. Double rejections are also extremely useful to spot potential reversals in the current trend. Congratulations, you are now an expert on drawing trend lines. For those who made it this far, here are a few bonus tips to make your trendline analysis more reliable. One strong confluence to pair with trend lines is the stochastics indicator. The stochastic indicator in TradingView is a momentum oscillator that compares a current closing price to its price range over a set period of time. Placed on a scale from 0 to 100, it helps traders identify overbought levels when the value is above 80 and oversold conditions when the value is below 20, as well as impending trend reversals. To use the indicator, simply go into the indicator section and type in stochastic and click on this one to apply it to your chart. For the best results, use these values for your indicator. For our entry checklist, we want two things to occur. In an uptrend, as price heads towards our trend line, we want the blue line in the stochastic indicator to head towards the oversold level. This helps confirm that price is indeed about to reverse near our key level. One last confirmation before we enter the trade is to wait for the blue line to enter the zone again. In this example, you can see price moving in an uptrend, and we can connect the higher lows with a trend line. As price falls towards the trend line, the stochastic indicator heads sharply into the oversold region. When the indicator shifts back into the zone, we enter the trade with stop loss placed slightly below the trend line and target a 2-to-1 ratio. Use RR tool. As you can see, the chart sharply reverses and hits our profit target cleanly. The key here is to use the stochastic indicator to give us more confirmation instead of entering trades blindly solely using trend lines. Trendline trading can be extremely powerful when applied correctly, but understanding the fundamentals of how price changes are reflected is crucial to become a profitable trader. So before you draw your next trend line on a live chart, watch this video first. It will show you exactly what to look for when price hits your level, so you can stop guessing and start reading price action with confidence. To understand price action in more detail, watch the first video in our series, where we break down how candlesticks reveal buying pressure, selling pressure, momentum, and rejection in the market. I hope you enjoyed this video and learnt something new. If you did, please like and subscribe so our team can continue to provide free content for you. Thanks for watching, and see you in the next one.